Fed is going to speak 2 more times this week, 3 times in all. And when the Fed spoke today, we saw what happened to the market. The market went down. Interest rates, the 5-year, the 2-year, the 10-year, they all went higher. So let me bring on the SPY so I can tell you exactly what I saw today. Okay, so first I brought up the 1 month of the SPY. Why is this important? Because we're plateauing here. The SPY actually was pretty flat today. You could see volume was almost dead, 88 million compared to 144 million, compared to 106 million, 102 million, outflow day 164. Again, today was $88 million, so it was extremely light. And then if you look at the chart, you're like, okay, well, it seemed to plateau. We're at higher levels. If you look at the 1-week chart, I mean, it's straight up, basically. Diagonal, straight up. So again, we're coming to a baseline. So what could happen potentially tomorrow is, let me just pull up the 3-month. We could shoot up higher. We could shoot up to 452, or more likely, as the volume's decreasing, if we have an outflow day, it's more than likely we'll go back down and we'll retest 436. And if it doesn't happen on Tuesday, I believe it's going to happen this week sometime. Now, as I shot the video Monday morning, I said, we're going to touch 440 on the SPY. And I said, the SPY is likely, let me just bring up the 1-day chart, because yesterday morning, futures were a little off. And I said that futures were likely to get bought up on market open. Then expected dip, then expected recovery, another dip, and then another recovery. So let's go to yesterday. Okay. So again, we had last week 5 straight inflow days into the SPY, right? Monday was a sell-off, 5 straight inflow days. So it tells me when futures open down here at 445, they're going to buy it up. And that's exactly what they did. They pushed it to 446. It had a quick sell-off from 10 to like 10:30, all the way down to 443. Now, each level or each step down, it had some support. So at 443, 442, 441, each time it hit a lower baseline, it showed some support, it showed some bounce. So let's go over that first. So here you got the rebound, then you have the Fed speaking. Heavy volume, right? So I'm actually anticipating more heavy volume. Again, I'm pretty sure we're going to hit 442, probably down to 440 again tomorrow. So we saw the 440 right here. It went up. Oh, market's going to recover. Everything's cool. Market's strong. 444 again, which I told you was the ceiling, 444. What happened when we hit 444? Right back down to 442. 442, where we go? Back to 444, back to 442, back to 444. What do you think is going to happen next? Not surprising when we open at 442. So let's talk about the psychology behind the trading. 5 days last week, starting with the bottom on Monday. So let's call that either a recovery or a bounce. I haven't decided yet. I think it's a bounce. Why? Because I think the market's going down. But let's say we're undecided. You have 5 straight inflow days. So going into Monday, when I said I expect a red day in the market today, even though we had 5 straight inflow days, but I didn't think it was going to be very red. Now, I do think a very red day is coming this week, and I will share why. But understand, the same people that were buying the market Monday, Tuesday, Wednesday, Thursday, Friday of last week said to themselves, this morning's dip, I'm going to buy the market. So they did. When they dipped at 2 o'clock, the SPY did and the markets did. You know what they did? They bought it up. However, now here's where the psychology comes in. The same people that think the market could potentially go down another 20%, 30%, 40%, the same people that are talking about potential recession if the Fed does not handle the interest rates the right way and handle reducing their balance sheet at the correct time. So if that happens, understand the downward pressure on the market. So it's not going to happen all in one day. There's no switch to flip. It's not like lights on, light off. So the market was green, then all of a sudden you say red day, flip the switch and everything just goes to hell. No, the same people buying last week were buying this morning. Now they will run out of money, or the bears could potentially win if it's a stronger case. Now understand, there's still war in Russia. There's still a lot of uncertainty with China. Precious metals are spiking to like record highs, like in the last decade. They're pushing high. So it's not like Russia and Ukraine provides the world with all these metals that should push these prices up hundreds of percents. I mean, it's crazy the influx. It's crazy the frothiness in the market. So like I told everybody, I'm not buying stocks. I'm not chasing stocks after they went up 40%. Let's look at a firm. AFRM went up 60% last week. Let's talk about Block or Square, right? SQ at $102. I was like, yes, I'm interested. I mentioned it in Monday morning's pre-market video on YouTube. I said at $139, I'm not interested. You get it? 102 looks good. 139, not so good. Where did Square close? Down 4 or 5%. Talk about Facebook from last week, Meta, right? At 186, I sent out a tweet. I'm like, yes, Facebook interests me at 186, 185, 187. Now Facebook is $212. What? It's up 25 points in like a week. Yes, that doesn't interest me. $212 Facebook doesn't interest me. Where would I be a player at Facebook? I guess about maybe $202. So down 5%. Where would I be a player on Square? I don't know. Maybe around 110, 112, maybe as high as 114. So if we're at 135 and I'm looking at 114, I'm looking for another discount of like 15, 16%. So there are companies I'm looking for discounts on. If you found my video helpful, wait and stay for the next one.